The financial markets are on edge. Uncertainty reigns. Bitcoin, the world's leading cryptocurrency, is caught in the maelstrom. After reaching an all-time high of nearly $110,000 in January 2025, Bitcoin has experienced a significant price correction. It now hovers precariously above $80,000. This volatility reflects the broader turmoil gripping global markets. A trade war between the United States and China simmers, threatening to erupt and further destabilize the global economy. Investors are apprehensive, seeking safe havens for their capital. Adding fuel to the fire is the escalating conflict between President Trump and the Federal Reserve. Trump has publicly criticized Fed Chair Jerome Powell, demanding his resignation. He blames Powell for the market's instability, arguing that the Fed's monetary policy is too restrictive. This power struggle between the White House and the nation's central bank has injected a dangerous level of uncertainty into the markets. The potential consequences of this standoff are far-reaching. Investors are left to grapple with a complex and rapidly evolving situation. The future of Bitcoin, like many other assets, hangs in the balance, vulnerable to the unpredictable whims of political and economic forces. The conflict between President Trump and the Federal Reserve has reached a fever pitch. Trump's public criticism of Fed Chair Jerome Powell has intensified, culminating in calls for his removal. This unprecedented attack on the Fed's independence has sent shockwaves through the financial world. At the heart of the dispute is a fundamental disagreement over interest rates. Trump, eager to maintain the momentum of the US economy, has repeatedly called for interest rate cuts. He argues that lower interest rates would stimulate economic growth and boost his chances of re-election. Powell, however, has taken a more cautious approach, expressing concerns about inflation and the need to maintain the Fed's credibility. This clash of perspectives has created a high-stakes power struggle. Trump's pressure on the Fed to cut interest rates is not unprecedented. He has a history of criticizing the central bank, accusing it of undermining his economic agenda. However, the current situation is particularly volatile, given the escalating trade war with China and the overall uncertainty in the global economy. The potential consequences of Trump's actions are significant. Removing Powell from his position would further erode confidence in the Fed's independence, potentially triggering a market panic. Investors are watching closely, anxious to see how this power struggle will play out. The financial markets are reflecting the growing uncertainty surrounding the Trump-Fed standoff and the ongoing trade war. Global stock markets have experienced sharp declines, with the tech-heavy Nasdaq index particularly hard hit. Investors are pulling back from riskier assets, fearing a broader economic slowdown. The US dollar, typically a safe haven currency during times of global turmoil, has also weakened. This unusual decline underscores the depth of the current crisis of confidence. Investors are questioning the stability of the US economy and its ability to weather the current storm. Meanwhile, gold, a traditional safe haven asset, has rallied to record highs. The price of gold has surged above $3,400 per ounce, reflecting investors' desire for tangible assets with intrinsic value. This flight to safety is a clear indication of the market's unease. Investors are seeking shelter from the storm, bracing for further volatility and potential economic shocks. The current market environment is a challenging one, requiring careful navigation and a long-term perspective. Section 4. Trump's economic gamble. Inflation denial and interest rate pressure. President Trump's economic rationale for demanding interest rate cuts is based on his belief that inflation is minimal. He argues that lower energy and food prices are keeping inflation in check, contradicting the Federal Reserve's more cautious assessment. Trump frequently points to the European Central Bank's decision to cut interest rates as evidence that the United States should follow suit. He has also accused the Fed of playing politics, suggesting that the September interest rate cut was timed to boost his re-election prospects. This accusation further undermines the Fed's credibility and fuels the perception that the central bank is no longer independent. Trump's economic gamble is a high-stakes one. While lower interest rates could provide a short-term boost to the economy, they also carry the risk of fueling inflation in the long run. Furthermore, Trump's attacks on the Fed risk eroding confidence in the institution responsible for maintaining financial stability. The consequences of this economic gamble are yet to be fully realized. However, the current market turmoil suggests that investors are apprehensive about the path the Trump administration is taking. Section 5. Safe haven scramble, Bitcoin and gold in the spotlight. Amidst the financial market turmoil, investors are seeking safe havens for their capital. Gold, a traditional safe haven asset, has experienced a surge in demand, with its price reaching record highs. However, Bitcoin, often referred to as digital gold, is also attracting attention as a potential safe haven. Bitcoin, a decentralized digital currency, is not subject to the same inflationary pressures as fiat currencies like the US dollar. Its limited supply and decentralized nature make it an attractive option for investors looking to hedge against economic uncertainty. While Bitcoin's price has experienced volatility in recent months, its correlation with gold prices suggests that it is increasingly being viewed as a digital store of value. Some investors believe that the current financial crisis could solidify Bitcoin's role as a safe haven asset. However, it's important to note that Bitcoin is still a relatively new asset class and its long-term prospects remain uncertain. Investing in Bitcoin carries significant risk and should only be considered by investors with a high risk tolerance. Section 6. Crypto's uncertain future. Volatility and potential interventions. The cryptocurrency market, like the broader financial market, is facing a period of significant uncertainty. Bitcoin's price volatility reflects this unease as investors grapple with the potential fallout from the Trump-Fed standoff and the ongoing trade war. While Bitcoin has shown resilience, other cryptocurrencies have suffered more significant losses. Ethereum, the second largest cryptocurrency by market capitalization, has experienced a sharp decline, as have other altcoins like Solana and Dogecoin. The overall cryptocurrency market has lost billions of dollars in value, mirroring the losses seen in the stock market. Market experts predict that some form of intervention is inevitable to stabilize the financial markets. This intervention could take various forms, including interest rate cuts by the Federal Reserve, quantitative easing measures, or a resolution to the US-China trade war. However, the timing and nature of such interventions remain uncertain. This uncertainty creates a challenging environment for cryptocurrency investors. Volatility is likely to persist in the short term, and the long-term outlook for the cryptocurrency market remains clouded by regulatory uncertainty and geopolitical risks. Section 7. Investors Playbook, Navigating the Storm and Looking Ahead. Navigating the current volatile financial environment requires a cautious and informed approach. Investors should prioritize risk management, diversifying their portfolios to mitigate potential losses. This diversification could include allocating a portion of their assets to safe havens like gold and potentially Bitcoin. Staying informed about developments in US monetary policy, geopolitical tensions, and the cryptocurrency market is crucial. Investors should closely monitor news and analysis from reputable sources to make informed investment decisions. Despite the current market turmoil, it's essential to maintain a long-term perspective. Bitcoin's potential role as digital gold could strengthen in the long run, particularly if fiat currencies continue to be devalued through inflationary policies. However, investors should approach Bitcoin as a high-risk, high-reward investment, allocating only a portion of their portfolio that they're comfortable losing. The current financial storm may present opportunities for savvy investors who can navigate the volatility and identify undervalued assets. However, it's essential to proceed with caution, prioritize risk management, and seek professional financial advice when necessary.
I'm sure you liked our video. We tried our best, and we will continue to unleash the fun. Like and subscribe to encourage our work.